Welcome back to the Global Supply Chain Week, day 3. My name is Andrew Cox, and I'm a senior retail analyst here at FreightWaves. And today is all about consumer packaged goods and perishables. Obviously, the coronavirus impacted supply chains across the continents and nearly every industry, but maybe more so the CPG because of the large demand swings and supply swings that we saw. To detail some of those disruptions and chart a path forward, we have Tom Madrecki for a keynote today. Tom is the Vice President of Supply Chain at the Consumer Brands Association. Before joining CBA, Tom spent more than 7 years at UPS over 2 stints. Tom, welcome to the Global Supply Chain Week, and thanks for taking the time.
Thanks so much, Andrew. It's great to be here and share a little bit of a perspective from the CPG industry.
Yeah, we are very glad to have you. Tom, I'd like most of this conversation to be forward-looking as possible, answering the now what, but we would be remiss to not take a look back and recap some of the disruptions that we've seen over the past year. So give us a little bit of a recap of the CPG supply chain and the disruptions that were felt since COVID hit in March.
Yeah, I don't think that it needs to be reminded. Everyone needs to be reminded of the fact that when they went to the grocery store early in the pandemic, that they were confronted with either scarce products, not being able to find the thing that they expected on the shelf, whether that was toilet paper, or disinfecting wipes, or meats, or anything like that. Everybody knows what happened, or at least how they experienced it as a consumer. Behind the scenes, I think that what was happening was essentially that not only were you seeing huge changes in the demand and where it was coming from, right? Obviously, that you had a bunch of restaurants closed, you had stadiums, bar, like everything was shut down there. But then at the same time, you saw this huge uptick in household purchasing. But you also saw issues around PPE availability, the ability for workers to actually produce products safely. I think that one of the things that were sort of like a hallmark of I'm going back in my memory to like the very early days of COVID was that we were just even trying to explain to regulators and to others that the same PPE and other safety equipment and things that were needed from the healthcare side were also needed in many CPG operations just because of how these products are manufactured. And so just having that dialogue and being able to keep workers safe was really the first challenge. And then it became a challenge. Well, how do you actually get those products to consumers and ensure that they're available? Which required not only the transportation capacity, which then there are a host of challenges there. I don't need to go down that path with anyone that's listening to this. I'm sure that everyone's acquainted with the truck driver shortage and other challenges there. But also then required sort of a level set with retailers and a new conversation because of that demand shift and because of the sort of the radical changes that were afoot in the supply chain. A lot of these systems that had previously been automated all of a sudden had to be done almost in person. You saw many companies just sort of say like, hey, like stop using the computer system altogether. It's giving bad information. We're just going to do it by hand for, until we get things under control. And so it was that sort of like that full crisis mode response. And it was a sustained response as well, because you saw that initial panic buying subside, but you still saw year over year on average, let's say like 30% increased demand in many product categories that were sort of much more higher in demand, like disinfecting wipes. You see like 100% or like sort of this ridiculous continued demand that's still there, even though of course that you still have worker safety issues and other challenges to deal with as a company, and just trying to keep up and run what is essentially a 24/7 operation at this point.
Yeah, Tom, there were certainly a lot of disruptions. The first one that comes to mind as a consumer, when I go to the grocery store, was obviously the stockouts, the mass-wide stockouts we saw. It started there in toilet paper and paper towels, as you said, but it quickly grew. One day there was no meat, and then one day there was no beans or rice or pasta. So it just seemed that they kept growing and growing, the stockouts. What have grocers and CPG brands, manufacturers, what have they done over the past year to build resilience in their supply chains to ensure that these stockouts don't happen if there's another surge in demand?
Right. I mean, so this notion of resilience, one is, I think, just sort of like a North Star going forward for a lot of these brands and for the industry as a whole. And even in our conversations with government and other entities, that like putting resilience at the core is just like a sort of a strategic mind shift, right? Like you're changing the orientation of something away from just pure, like what is the most like efficient system possible, to building in resiliency and accounting for risk up front. And that isn't to say that efficiency isn't still a part of that, but if you know that you're going to have what is increasingly no longer like a quote like black swan event, right? Like if a black swan event keeps happening, it's really no longer a black swan. It's just like accounting for risk. So if you know that that's going to happen, or you're knowing you're going to have disruption, how can you build in a degree of replication or duplication in the system so that you have alternative means of going to market, or you have a sort of built-in risk mitigation into your supply network? It also is really a shift away from rather like linear chain thinking when it comes to the value chain, and more to having more of a network mindset. And that goes to network design. It goes to sort of like how you're thinking about integrating many of the companies that you've acquired. Certainly the CPG industry, which is an old industry. It's also grown through acquisition for so long that there's I think a need to revisit, and many companies are doing this now when they're looking to their network, and they're thinking about how do you, if you could sort of do things over and you weren't just sort of building as quickly as possible as you were before, if you could revisit everything, think strategically based on the experience of COVID, how would you want to redesign that and sort of redesign your own network? The last piece I would mention is that retail collaboration piece, because, and one of the things we saw during COVID was that the companies that were able to sort of pivot the best, that were able to ensure the availability of product, were the ones that had open and transparent lines of communication with their retail partners. And that emphasis on collaboration is, I think, something you'll see going forward as a key part of that resiliency. And that goes to the ability to safely share data, to be more open about what you have, when you have it, when people want it, right? Like it goes and touches on all that. And if you're able to shift into that more collaborative work stream with your retail partners, I think that you'll find that those CPGs are the ones that are more successful going forward.
So I do want to circle back and talk a little bit more about the collaboration that evolved throughout the coronavirus pandemic. But I do want to touch on something you mentioned in your previous answer, that was migrating away from a value chain to more of a value network. I thought that made a lot of sense. And in this industry, we talk a lot over the past year about moving away from a just-in-time supply chain to a just-in-case supply chain. Is that something that your members have been saying that they're pushing for?
Yeah, I mean, maybe not the exact same verbiage. I mean, everybody has sort of like different ways of talking about this issue, but that notion of a chain to a network approach actually arose out of a study that the Consumer Brands Association did along with Accenture and Coyote Logistics, where we surveyed many of the leading CPG brands executives, and sort of got a ton of feedback from CPGs about what they were doing and how they were investing in their operations, where were their sort of pain points, what was keeping them up at night, just the full extent of questions you can imagine. And the feedback that we received was that they were this notion of just sort of producing and working as efficiently as possible, and sort of like applying this older way of doing business was no longer suited to the increasingly fast-paced nature of business today, not only because of COVID, but because of sort of the evolving retail landscape when it comes to e-commerce, when it comes to accounting for and dealing with issues around the sort of transportation capacity crunch or other issues. Like, you need to be more flexible and nimble, and to better incorporate technology and leverage data where possible, to better utilize assets, to ensure that you are hitting your sustainability targets within your sort of operation. It touches on all of those major goals I think that CPGs have when it comes to sustainability and more efficiency, growth, ability to meet consumer demand. But it's reliant on that shift in mindset from chains to networks.
So, Tom, as you mentioned, collaboration was a big piece in 2020. We saw a lot more collaboration, not only between retailers and other retailers or brands, but between manufacturers and brands. Why do you think we saw an explosion of this in 2020? And do you think it will stick post-COVID in a more normal landscape?
Yeah, I mean, Andrew, just to be very frank and sort of like cut to the original reason I think you saw it was to your point on like out of stocks. Like, people were like, where is the toilet paper? Like, where is the product, right? And we had a number of conversations with manufacturers that said they were able to get more done with their retail partners in the span of, let's say, 2 weeks or even like day than they were able to get done in like the last 20 years or the last 10 years, right? Because all of a sudden you sort of just gotta like you have the come to Jesus moment, and everybody's at the table, and you're like, well, we just got to deal with this. And you can hash it out, and it's you sort of strip away, I think, some of the artifice of what doing business normally looks like, because of that crisis mindset. I do think it's here to stay, though, because again, to that point of the increasingly, I think, fast-paced nature of what business looks like today, and the fact that retailers also need to shift and account for e-commerce growth. Like they're changing how they do business, which requires their suppliers, the manufacturers, to have that conversation. Like, okay, well, where are you going as a business? Because that's the manufacturer's growth opportunity. Like that's how they've reached their consumers, or their ultimate, like the purchases of their products. And so the need for that conversation that I think everyone knows about, is what's going to make that collaboration stick, because everyone wants to grow, everyone wants to sort of capitalize on that opportunity. But you have to have that conversation and that collaboration going forward in order to make it work. Those that don't have that collaboration in place, is just not going to make sense for them.
Yeah, e-commerce online growth in grocery has exploded in 2020, nearly tripling since the beginning of the year. And I do want to talk about e-commerce here in a moment, but I want to talk about the brands that were seen as reliable throughout the pandemic. So there was this flight to reliability, and I want you to talk to me about how the manufacturing supply chains were able to instill that reliability. It was just by having their product on the shelf. What did those companies do to ensure that their product stayed on the shelf and differentiated themselves from the rest of the pack?
Yeah, I think that flight to reliability was one of the sort of like the hallmarks of COVID, for sure. And we did a host of consumer research where we were just surveying consumers and saying, um, you know, what sort of how do you make a decision based on different products? So what increased trust for you during COVID, in terms of the CPG industry? And the number one thing again and again, was just the physical presence on a shelf, which makes a lot of sense. Like that's like it's a manifestation of trust, in the industry. When you actually go to the store and you're like, oh, the thing I wanted is there. It's not. So I and the other thing I think that people came to rely on was also just the brands that they knew, maybe from their childhood, maybe from just growing up. They reverted back to that in many ways, and I think that the CPG industry, frankly, benefited from that. But to your question as to what differentiated the brands that were on the shelf versus not on the shelf, some of it, and this is not to oversimplify things, but some of it was honestly just like sheer will of the industry to like buckle down, get things done, even amid you saw absenteeism go from sort of like 2 to 3% on average to closer to 8-10% in some cases. You saw some facility shut down. Like there's a host of challenges there, but it required that shift to say, like, we're going to get through this. We're going to run operations over the weekend. We're going to change how we do business in order to keep up with the demand. The second piece I'd mention is that the CPG industry worked really closely with government, to try to ensure that operations were able to continue, and that we were able to thoughtfully, I think, explain and get through some of the initial challenges around COVID, whether it was just ensuring that the industry was deemed essential, or that was well understood as to who was essential in that value chain. Because I think one of the other things that happened is you also saw misunderstandings at time as to who was a part of the full supply chain, and so people were left out of that, maybe, that needed to be there. Many of these CPG manufacturers, for example, rely on different machinery manufactured maybe overseas, or sort of customized specialty equipment needs to be repaired or taken care of by a specialty mechanic, maybe also from overseas, and those people maybe weren't allowed into the country. Like there's all these complexities around COVID, right? So it's ensuring that the continuity of that value chain, and the CPG industry, I think, really rose to the occasion. The Consumer Brands Association, for its part, advocating on behalf of the industry, trying to ensure that just that business rate was able to continue, and the CPG industry is able to meet that consumer demand. The last piece I think I mentioned, and this goes to the retail collaboration piece, was honesty and transparency. And I know it sounds sort of funny to say that the CPG industry, the brands that did best and that were seen to be the most reliable, were the most open and transparent with their retail partners, even when they didn't have product to offer, right? You never want to like overcommit. You never want to be the person that sort of over promises. But there's also a tendency, I think, at times to try to sort of maintain the status quo, like not rock the boat a little bit if you know that you're in a crisis. But I think what was sort of not surprising, but you saw some of the companies that were experiencing the highest levels of demand that frankly didn't have capacity to manufacture more disinfecting wipes, or sort of weren't in the, let's say, the best position possible given the strain on the supply chain. And they were open and they're transparent, and they say, like, this is what we have, this is how we're going to work with you. It changed the conversation, I think, for them. And they've sort of stayed the course and are seen as these really, really trusted brands in America right now.
Yeah, that's something that Peloton is dealing with right now. They've been not as transparent and not upfront about the delivery windows, and they're struggling. A lot of people are very upset about it. So let's talk about online grocery, because it's been a major growth part of part of the industry for 2020. It still lags behind most other industries when it comes to a percentage of online sales. It's only about 12 or 13%, but that's triple where it was pre-COVID. And then additionally, it's actually stayed at its peak level since March. So the online grocery may be a smaller subset of the industry, but it's going nowhere and it's here to stay. So with the growth in e-commerce, what are the conversations that manufacturers, that your members need to be having with retailers to ensure that their operations are aligning and their goals are aligning?
Yeah, and I mean, I think that the whole conversation around e-commerce is fascinating, not just from my professional level and like working with CPGs, but also even just like personally, right? Like pre-COVID, I was not the person that was ordering groceries online. I like going to the grocery store. I like picking out my fish. I like picking out going through the produce and figuring out like what's best. And at the end of the day, though, you realized, especially during COVID, one, that like you don't have the amount of time that you would even just spend at the grocery store relative to being able to add items to your cart that you previously were like, you save so much time. Yeah, the fish wasn't perfect, or like something wasn't exactly right, but generally speaking, you're pretty happy, and all of a sudden you get to this time back, and especially like working from home and like having a kid or like whatever the case is, it makes it so much easier. And so the first thing I'd mention is that there is a stickiness, I think, to e-commerce or online grocery buying that is here. I don't think it's like gonna radically scale back. Maybe you'll see a small sort of like plateau or like sort of dip, but it's here to stay, and it's just been accelerated. You see those sort of predictions that it's anywhere from, some people say 3 years, 5 years, 10 years. Everybody has their different number, right? But clearly that trend has accelerated, and the need for the conversation between manufacturers and retailers around basically what to do with it and how to make that model work needs to happen. I don't think that anyone has completely figured it out. It also is a space that it's not just one sort of monolithic notion of like e-commerce grocery, right? There's so many different iterations of what that looks like when it comes to going direct to consumer or click and collect, and everybody's going to need to sort of find their own way, if you will. And there's also, from a CPG manufacturer perspective, there's going to be different sort of most successful strategies dependent on the product category, dependent on the product itself, dependent on the brand. And so you saw some manufacturers, they have their own sort of direct to consumer platform that they've listed for certain products. That may work for those products. You may see other cases where it makes sense to go direct to, I say direct to consumer, but like direct to wholesale or to restaurant or to some, sort of large buyer for certain products as well. You'll see other cases where it's really just a matter of trying to have manufacturers work alongside their retail partners and better understand, what is sort of in-store, let's say, use an example, like in-store promotion look like if there is no longer a sort of physical storefront, and what needs to change about how you do couponing or whatever the case is to drive growth and to make it sustainable financially. Because to the point around, and I don't want to speak totally on behalf of the retail industry, but I do think that the last mile is clearly a costly and not necessarily easy space to play in. And this is just even going back to my experience at UPS, right? That like, unless you can figure that out and make that cost effective and to make the margins work, and especially given that the CPG industry as it is not a high margin industry, it's going to be a really complicated and thorny issue for folks to deal with. But the demand is there from a consumer perspective, and so you sort of you have to have that conversation and you have to figure it out when it comes to that last mile piece and just sort of accounting for it. And I think that that'll require some really thoughtful conversation between manufacturers and retailers from a sort of inbound perspective to retail. I think there's also going to be needed conversations around just like replenishment schedule, ordering, what is, sort of the notions around like OTIF and what are the desired levels of performance that retailers are putting on CPGs. That conversation can also shift. I think the model today, and one in which I think that retail has a lot of leverage over manufacturers today about like, these are our demands, or this is what the performance targets are that we want you to hit. That model is in some ways punitive, right? It's based on, we set the bar, you didn't hit the bar, okay, now here's a finer fee. Going forward, you could see models unfold that are more collaborative, where everybody agrees up front, like, this is what we want to get out of this retail to CPG engagement. These are the desired levels of performance, and we're going to accurately price those, and we're going to make things more transparent. Everybody's going to understand what the costs are involved in this. And through that more collaborative approach that's not as punitive, right, and by pricing things accurately up front, you're able to drive greater sort of shared value in that. And everybody's more on just like the sort of a level playing field, if that makes sense.
Yeah, it does make sense. It seems like collaboration is a win-win for both parties involved. But I do want to talk about direct to consumer for a moment because it's very interesting to me. The first one I think I remember seeing was Mattel selling their toys and things online direct to consumer, and then we've seen even some massive CPG brands, Pepsi and Kraft Heinz, that have rolled out their Shopify Plus members, and they have their own direct to consumer sites now. So, and this just makes so much sense to me. Like, if you are a hospital or a hospital cafeteria or a school or a hotel, for you to be buying your condiments directly from Kraft Heinz rather than Cisco or whatever distributor you would, like, is this the future? Are we not making a big enough deal out of this, or do you think that this is just kind of a fad and it doesn't stick long term because of the difficulties and the new things that they have to implement to make a direct to consumer model work?
Yeah, I hate making a complex question more complex, or like sort of like doing like the deferral thing, right? Or like you sort of get a question, you're like, it's more complicated, but it actually is. And the reason I say that is that it depends, I think, entirely on the type of product and what people are, Pepsi's sort of snacks.com approach, I think, works because there's, a diversity of snacks or flavors that people want to have access to. There is a clear opportunity, I think, there that makes sense. The same when you look to things like to your door personal care items, or certain categories like that have seen even growth before COVID. But then there's other things where, at the end of the day, consumers want convenience. They wanted the ability to purchase all of their products together at the grocery store. And so going through a retail channel first, or some type of a consolidation, makes a lot of sense. And so I think that what you'll see is a plethora of different platforms, dependent on the product category, dependent on the sort of the type of thing that's on offer and the desired outcome when it comes to sort of that growth. And to even the point about like going more direct to restaurants or to wholesale buyers, things like that, it sort of that makes sense, I think, because of the scale. So I think it's a conversation around what is the product, what is the scale of the product, where are the costs involved, and I think that it all goes back at the end of the day in some ways to making the margins work, and just sort of figuring out for each different direct to consumer or e-commerce case, how do you make that financial model work? I think everybody pre-COVID sort of understood how the CPG to retail margin model worked. That's the standard grocery model. Going into this like sort of new era where some things are sold online, some things are sold through a retailer, but then picked up in line. Other things are sold online, picked up at the store, but somebody ran around the store and like put it all in. Like, that sort of has entirely disrupted what that model looks like, and so people just need to, I think, figure out sort of the financials that underlie all of that.
Yeah, it seems like they're starting to. It seemed like 2021 was just kind of a year of throw spaghetti at the wall, see what sticks, see what customers like, and then we'll try to make it more profitable down the road. I saw some recent analysis from Gartner that said 30% of a leading 500 retailers are rolling back free returns, and I think 12.5% were rolling back 2 free-day shipping. So they're thinking about these new fulfillment methods that they've expanded upon and trying to make them more efficient and more profitable, or incentivizing customers to use the more efficient and more profitable ones rather. Let's talk about technology for a moment, because it doesn't seem, well, from an outsider's perspective of this industry, it doesn't seem that there's been many like technological breakthroughs in 2020. It was rather just chains just using technology that was already available to them that they've been reluctant to use so far. What do you think new technologies, especially with at retailers, how should the conversations go? I know we've touched on this a bit, but how should the conversation go between manufacturers and retailers when it comes to new technology that's being rolled out, and what technology are manufacturers looking at when it comes to direct to consumer and e-commerce models and different fulfillment methods?
Yeah. So, I mean, I'm going back to the comment that was made by one of our members around sort of being able to get more things done in the span of a couple days than it could like over the course of several years. One of the things in the Consumer Brands Association, along with Vector Software, which is a startup out of the Bay Area, and our partners Accenture and Coyote Logistics, CSCMP, GS1, is just an example. We brought together, upwards of 30 CPGs, a dozen or so retailers, carriers, other members of the supply chain community to create a contactless delivery task force. And really the premise of this, right, was originally to keep workers safe during COVID, to prevent issues around sort of transmission between dock personnel and the truck driver that shows up, the security guard, to minimize all that. But it was done with an eye towards minimizing paperwork, which is hardly a novel concept. To your point about is it new technology? It is. It's new in the sense that it's being applied in a new way. It's new in the sense that there's a sort of the visual recognition stuff and that underlies a lot of it. I think is cutting edge, and it is sort of leading in a new technology era. But the notion of going from paperwork to electronic is not new, right? That's not some novel concept, but it, for whatever reason, because of the way that the industry is structured, because of the way the supply chain runs, a lot of it is paperwork based, and so being able to imagine a future that is contactless, and increasingly so, right, that you can minimize not just the touches at when a product arrives, but that you have predictive ability and visibility all across the supply chain, right? You could start imagining a future that not only is contactless, but then you have end-to-end visibility. We also launched a similar project with Four Kites that was looking more at this issue of end-to-end visibility. And as you layer these technologies on top of one another, when you have visibility, when you have the ability to have more sort of seamless, touchless handoffs in the supply chain, you can also then start to imagine and layering AI and predictive technology, so that then your model can more or less start to optimize and adapt more in real time. And that goes, I think, to this question of how do you build a more resilient supply chain, or how do you have sort of a network mindset versus more of a linear chain concept, is that it's enabled by these technology sort of enablers, if you will, right? That each piece adds on and allows that system to work not only more efficiently, but then to adapt more in real time as disruptions occur.
Tom, you told me before we got on the call here that sustainability kind of took a backseat throughout COVID, simply because there were so many we were in that crisis mindset that you had mentioned earlier. But it seems like when people are building more resilience in their supply chain, making major changes to their supply chain, this could be actually a good opportunity to have conversations about sustainability with transportation partners, because manufacturers and many of your member group are not do not own their own trucks or do not own their own transportation capacity. What kind of conversation should they be having with transportation partners, because they see transportation as a big place to grow and be better, more sustainable? What conversation should they have?
Yeah, and I think that one of the sustainability means so many different things, right? So for many of these companies, all through COVID, they were walking and chewing gum at the same time. They're making commitments on the recycling front. They're making commitments on the packaging front. But the at least in my world, from a supply chain standpoint, and working with these companies, one of the things that I have seen, even in the last couple of weeks, even in the last couple of months, is this renewed interest in, and I think part of this ties back to the Biden administration, frankly, and companies knowing where that administration is headed when it comes to, and sort of what's on its mind when it comes to transportation. If you look to the transport sector, it's the one sector that hasn't seen a decline in carbon emissions, or sort of like plateaued. Other sectors are making sort of significant inroads in that regard. And if you then dive deeper into the transportation sector, there's clearly a portion of those emissions that are tied to freight or are tied to commercial vehicles. And so it's not sort of missing on anyone that, like, it's an underlying issue. If you're going to make certain carbon emissions reduction commitments, or you're going to say something about how you want to evolve as a company or become more of like a zero carbon type company, you have to figure out what that looks like. And to your point, it's not an easy conversation because you're so reliant on outside transportation spend, or you're so sort of beholden to what's available to you currently from a technology perspective, that there's not like, oh, let's just like flip the switch, we'll all go all EV, or we'll double down on alternative fuels, or we'll transition to hyper. Like, it's just not available. And so I think that if I in a CPG's shoes, and I'm thinking about what is to come, there's a couple of different things that come out of that. One is that I'm going to work with my carriers and try to sort of see, are there opportunities to shift, or are there opportunities to look at that? Granted, there may not be, or there may be limited opportunities to that because of the transportation capacity crunch, and people, frankly, just trying to get as much capacity as they can and ensure that goods are picked up. The second thing, though, and I think that where you see companies focused with government and sort of asking or talking about this more and more, is what does the underlying infrastructure need to look like, so that maybe not, we're not going to fix transportation sustainability this year, but maybe in 5-10 subsequent years, that you have that underlying infrastructure to be more sort of EV driven, or to have the ability to move the needle on carbon emissions and make reductions. And I think that ties it back to issues that we already know are going to happen this year around transportation infrastructure bill, or other aspects there. And how do you build and I kind of account for just like even transportation funding mechanisms, things like a vehicle miles travel tax or other things like that, so that you have a system that is paid for, you have a system that then has the infrastructure that goes alongside it, so that you lay that foundation for what would be a more sustainable transportation system long term.
It's interesting that you mentioned that the carbon emissions for the trucking industry or the shipping industry haven't plateaued, haven't really declined over the past few years or decades. Susie Schoenberg, the head and founder of Flexboard.org, just told me yesterday that if shipping was a country, it would be the 6th largest polluter on the planet. So yes, it's definitely a huge and major polluter. I wanted to ask you, that's a good segue into policy, though, into the government. I think this would be a good place to put an end, to wrap it up afterwards. Is just, what is the need for policy alongside these industry efforts? What is the role of government in adapting a more modern supply chain and supporting these retailers and these manufacturers in it?
Yeah, so I mean, I think that one of the things that people already, as it is, probably don't think, apart from those listening and like us, like, the supply chain as it is not something that's like top of mind for everyone in the world, until they go to the grocery store and they can't find what they want. Then all of a sudden, supply chain becomes like the hot button issue that they all care about and they want to have dinner table conversation around. Supply chain policy is probably like they really don't care about that most days. And so I think what happens sometimes is that if the supply chain is invisible and supply chain policy is even more invisible, you don't realize the extent to which policy every day shapes supply chains. Like layers and layers of policy shape that sort of macro environment in which supply chains operate. And obvious examples are things like transportation and trade policy, like sort of like the literal roads and bridges that underlie and like sort of the rules and regulations as to how you sort of can go across borders and things of that nature. Like there's a clear thing there, but everything from USDA to FDA to EPA, like all of these things in some ways shape that macro environment of supply chains. The Consumer Brands Association and CSCMP are actually just about to publish a report that for the first time, I think, really takes a look at the full scope of supply chain policy when it comes to, what are all of those different regulations, laws, other things that impact supply chains, that play some sort of guiding role in their development and ultimately impact national competitiveness and national resiliency when it comes to sort of supply chain performance. And the key central finding one is that there's a bunch of policies that do impact that, and that there's also at times, frankly, a degree of haphazardness, or that it's sort of accidental at times. It's not really orchestrated in any particular way, right? Like, yes, there's a transportation bill, and the original intention of it was to build roads and bridges. Like, there's a frame of reference there, and it's not to take anything away from the good work that is done on that transportation bill, but it's not necessarily done with an eye towards let's do a transportation bill so that we have a more properly functioning supply chain. And the same goes with every other policy that's out there, right? Everybody's sort of like in their silo, in their lane, and there's no interagency coordination. There's no level of sort of like, oh, like if we did it that way or we did it this way, the whole system would work better. And so the report ultimately, I think, calls for that level of enhanced coordination and just being more strategic, and frankly taking more of the learnings that I think that we've seen from the supply chain community, right? Like supply chains over the course of time have become more integrated. The supply chain function is no longer within any company, especially CPGs. It's no longer just like efficiency. It ties in sustainability. It ties in all of those other aspects of doing business, and it thinks about growth in a more holistic way. And so ultimately, I think that the report puts forward this notion that there's this clear opportunity for government to step up to play not a larger role in supply chain, but a more coordinated one, right? Like there's plenty of policy already there. It just needs to be wrapped together in a smarter way.
You're not going to get any argument from me there, man. Wrapping things in a smarter way and actually maybe having some more input from the people that are going to be most affected by it. I think that's a good way to move forward with any policy
Yeah.
in the US. Tom, I got to thank you for the time, man. I also want to give you the opportunity to tell anybody watching where they can go learn more about the CBA or get involved with your organization.
Definitely. And thank you, Andrew, for taking so much time. Folks can just go to our website, consumerbrands.association.org. We also have a whole host of resources for CPGs and others around the coronavirus. So definitely check that out.
Of course, Tom, thank you so much for your time today. This has been an incredible way to start the day. Start the day to Global Supply Chain Week, Day 3, all about CPG and perishables. So stay tuned to learn a lot more about the industry. There are a lot of insights coming from industry experts soon. Stay tuned.